Q&A on CII.
What is the difference between Takafol and conventional insurance?
Conventional insurance refers to the transfer of risk. In other words, the insurer now is responsible for insuring against the risk or the potential risk of loss, damage, destruction, etc. From an Islamic perspective, we don't refer to Takaful or Islamic indemnification as Islamic insurance. That will be what is termed as an oxymoron. In other words, it will be a paradox where you can't say that insurance is impermissible and then you have Islamic insurance. Here we say this refers to as Islamic indemnification. Conventional insurance is impermissible because of three factors. The first is that of riba and interest. The second element is that of gharar or khadar. Gharar refers to future uncertainty, where there is an event that could occur, but that event is also uncertain. And khadar refers to where the possibility of that event is not even there also. Thirdly is in terms of the issue of gambling, that you contribute, let's say 100 rand, but you get a benefit of 100,000 rand. This is one form of gambling where you have paid X amount and you have received much more than that. When it comes to Takaful, the first is that the contract is based on a Sharia compliant concept. It could either be a waqf, an Islamic endowment fund, or it could be a mudaraba, it could be a wakala also, where it is based on a nominee, based on a relationship of a deputor and a deputy. In other words, that one person is the principal and the other is the agent. So the underlying concept is also Sharia compliant. Secondly is the issue of Sharia governance, that in a conventional insurance scheme, there is no Sharia governance. But in a Takaful, you have a body of scholars that will review the underlying transactions to make sure that they are Sharia compliant. Thirdly, is that the underlying investments in a Takaful scheme, the investments have to be Sharia compliant. Whereas if you look at the investments in a conventional insurance, where it is the additional funds, those funds are now invested into all types of impermissible financial activities which are not being regulated by Sharia. Fourthly, when it comes to the surplus in a Takaful scheme, then the surplus also, because it is not owned, there is no ownership by the shareholders of the scheme, but it is owned by the Takaful policy holders, it is very possible that you as a Takaful policy holder could also receive a surplus. If there is a surplus, after indemnifying each other, then you could also receive that surplus. And lastly is the issue of re-Takaful. When it comes to a Takaful scheme, then you don't have reinsurance. That is, there is re-Takaful, where there is a back-to-back Takaful arrangement to reinsure or to re-indemnify the scheme.
Q&A on CII.